Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to dive into today's market action with you. We've got a packed day with some exciting moves in the indexes, standout performers among large caps, and big news shaking up the streaming world. Plus, we'll touch on key earnings and sector trends that every long-term investor should keep an eye on. So, let's jump right in and break down what's driving the markets on December 5th. 2025. First up, let's talk about the major indexes because they're setting the tone for the day. The S&P 500 nudged up by a modest 0.19%, hovering near its all-time high, which signals that the bulls are still in the game despite some choppiness. The Nasdaq also showed strength, climbing 0.31%, fueled by tech sector momentum. Meanwhile, the Dow Jones edged up 0.22%, reflecting steady confidence in blue-chip names. However, not everything was rosy. The Russell 2000, representing small caps, dipped 0.38%, hinting at some caution in riskier corners of the market. For long-term investors, this mixed picture suggests a market that's still got upside potential but isn't without its selective pressures. Now, let's spotlight some of the big winners among large caps today. Warner Bros. Discovery stole the show with a 6.28% surge, likely tied to the blockbuster news of Netflix's acquisition bid. We'll get to that in a bit. Salesforce also impressed, jumping 5.3% after beating earnings expectations, showing that enterprise tech remains a hotspot. Adobe wasn't far behind with a 5.33% gain, riding the wave of AI-driven demand. And Micron Technology popped 4.66%, continuing to benefit from semiconductor strength. These moves highlight pockets of opportunity in tech and media for those of us with a long-term horizon, especially as innovation and consolidation play out. On the flip side, we've got some notable decliners to watch. Energy and financial names took a hit, with BP sliding 3.76% and Total Energies down 2.94% as oil prices likely faced pressure. Robinhood Markets also dropped 3.74%, possibly reflecting profit-taking after a strong run this year. And Itaú Unibanco fell a hefty 6.44%, signaling some regional or sector-specific headwinds in emerging markets. For long-term investors, these dips could be entry points if fundamentals remain solid, but it's a reminder to keep an eye on global macro trends that can sway even the big players. Looking at the market movers by activity, Nvidia continues to dominate attention, though it slipped slightly by 0.53% today. Netflix saw heavy trading with a 2.89% drop, no doubt tied to its massive acquisition news. Intel, on the other hand, gained 2.25%, showing resilience in the chip space, and Tesla eked out a tiny 0.1% gain, holding steady despite recent volatility. These names are the pulse of the market right now, and for us long-term folks, they're a window into where innovation and consumer trends are heading. Diving into the most active stocks by volume, it's no surprise Nvidia tops the list again, reflecting its central role in the AI narrative. Netflix also saw huge trading action, underscoring investor reactions to its strategic moves. Warner Bros. Discovery was buzzing too, with that 6.28% gain drawing eyes. And SoFi Technologies, despite a 6.15% drop, had significant volume, hinting at retail investor interest. These high-volume stocks often signal where short-term sentiment is strongest, but for our long-term strategy, they're also clues to enduring themes like tech and finance disruption. Now, let's pivot to some game-changing news that's got everyone talking. Netflix announced a staggering $72 billion deal to acquire Warner Bros. Discovery, a move that could reshape the streaming landscape with over 400 million subscribers under one roof. Shares of Netflix dipped nearly 3% on the news, likely due to concerns over the hefty price tag and integration risks, while Warner Bros. Soared. Senator Elizabeth Warren called it an anti-monopoly nightmare, so regulatory hurdles could loom. For long-term investors, this is a bold bet on content dominance, but it's a reminder to watch how consolidation plays out against competitive and legal headwinds. Shifting gears to earnings, it's been a busy week with some heavy hitters reporting results. Salesforce crushed expectations, driving that 5.3% stock pop as their cloud and AI solutions continue to resonate with businesses. Ulta Beauty also shone, surging to a record high after beating estimates and raising guidance, signaling strong consumer spending in beauty. Kroger posted mixed results with a revenue miss, but beat on earnings, boosted by a 17% e-commerce jump. And Hormel Foods exceeded profit expectations, prompting analysts to raise forecasts. Looking ahead, keep an eye on upcoming reports from companies like Toll Brothers and DocuSign, which could sway their respective sectors.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Let's take a quick look at the top performers over the past week among large caps. Microchip Technology led with a massive 22.83% gain, showing strength in semiconductors. MongoDB wasn't far behind, up 20.4% as cloud database demand grows. NXP Semiconductors also impressed with a 16.64% rise. And AppLovin surged 15.94%, reflecting mobile app ecosystem growth. These weekly movers highlight where momentum is building, key for us to spot long-term trends in tech and innovation. On the other end, some large caps struggled this week. Symbotic plummeted 28.35%, likely on profit-taking after a strong run. Pure Storage dropped 16.94% despite solid fundamentals, possibly due to sector rotation. W.R. Berkley fell 8.54%, and Syncora slid 8.39%, reflecting some pressure in insurance and healthcare distribution. These declines could be short-term noise, but for long-term investors, they're worth monitoring for potential buying opportunities if the dip is overdone. Wrapping up with a sector overview, healthcare led the pack with a 1.61% gain this week, buoyed by strong earnings from players like Humana. Technology followed with a 1.18% rise, thanks to semiconductor and software strength. Energy also climbed 1.13%, likely on oil price stability. These sector gains align with broader themes of innovation and essential services, areas long-term investors often lean into for steady growth. On the weaker side, real estate lagged with a 0.85% drop, pressured by interest rate sensitivity. Consumer cyclical stocks fell 0.53%, hinting at uneven spending patterns, and consumer defensive names dipped 0.19%, showing some softness in staples. These underperformers remind us to stay diversified and watch macro shifts like rate expectations that can impact even defensive plays in the short to medium term.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.